Hey everybody, Steve Olson here with the Peak Group. I just wanted to record a quick video for you because I saw a great article. I'm a couple of months late to the party on it. It was published in June of 2025. But this is with respect to our Flex Space project. We just purchased another one in the Dallas-Fort Worth Metro, so we've got a lot of this coming because we really believe in it. And as it turns out, we're not the only ones. Corebridge Financial released an article and a study. The headline is Small Bay, Big Play, the rising star of the industrial sector. So if you're a residential investor and you're looking for something that's maybe a little bit more passive and you want to take advantage of triple net, it's really something that you should heavily consider. We're going to link to the story in the notes, but I just want to give you kind of a summary of it. Basically, shallow bay industrial, as a refresher, is smaller flex commercial space. You don't finish it except for maybe an office and a bathroom, and the tenant brings their equipment, their fixtures, whatever they're going to do with the property, and they have to return it to its shell status when they leave. Additionally, with it being triple net, the tenant covers the property taxes, insurance, and maintenance for the shallow bay flex. So it's really passive, but I've said to a lot of people, in the past, until we did this, right, shameless plug, you had to be the developer of a big property or the limited partner in like a syndication. And even more interesting is, like we say, this shallow bay stuff. Most of the flex space out there is big, giant warehouses and shipping centers, and it's out on the fringes of the metro, right? But a lot of small businesses, especially after COVID, are looking for much smaller spaces, 1,000, 2,000, 3,000 square feet where they can run their small business out of. And they're not the only ones. Investors are looking for properties like that. So it's a compelling opportunity because there is a lot of demand and there is not a lot of supply. And you're looking at properties that are under that 150,000 square feet. You see how big this is. When you get much smaller, like we're doing, the vacancy rate is well under 5%, which is almost half of what the large format industrial properties are. So there's just not a lot of new construction for these assets happening. It's just the story goes on to say that it's 0.5% of the existing industrial stock, right? A lot of institutional capital is shifting this direction as they see small businesses flood into this kind of stuff, right? They continue to say that it's the Midwest and the Sun Belt, hello DFW, that are driving these rents, especially in the Sun Belt with the population growth. And you've got diverse types of tenants, right? You've got cheap space to purchase. It's a good inflation protection with the leases being triple net, especially there in Texas. I always talk about property taxes in Texas are tough, right? That's a reality that we have to accept. But this is a way to participate in the growth of the Texas market while hedging that inflation, that property tax, that insurance risk that a lot of people see. So we're linking to the article. We hope you'll join us. We're about to release phase 2 of the Weatherford Business Park, where you can be an individual investor, not an institution, and ride that wave along with all the big boys. Talk to you soon.